Well, welcome to this channel, whether it's ours or mine, it doesn't matter. But we will be having casual conversations, and in this regards for today, we will have Lazarus here. Very casual. We're not going to give speeches, but it's things that we should all understand.
Yeah.
So we'll take it on piece by piece and see what we can get out of the conversation. The first thing we want to start off with about the amendments that were made to various taxes end of last year, that is 2022.
Yeah.
And what were those amendments?
So yeah, on the 29th, while we were just waiting for the new year to jump in 2023, the president was busy signing off, I think, 3 very important amendments to tax laws.
Yeah.
The first being obviously the income tax. There's some amendments that were made there, and then VAT. There's some amendments that were made there as well, and then you've got stamp duties, which you also saw that act being amended as well. So 3 of them that were amended during the 29th of December. But then I think due to the nature of the publication into Government Gazette, we only get to see them in early 2023.
Oh, okay. Now, let's start with the removal of VAT on sanitary pads. What else has been amended for VAT purposes?
So I think that was widely the most anticipated one, because probably it was already in the mainstream. That government is planning on pushing on removing VAT on sanitary pads. So that zero rating on sanitary pads is one of the amendments that were made. Another key amendment I think that was made on the VAT front, especially is the registration of companies. That if you haven't started making any sales yet, VAT is a tax that is charged on all transactions. But not all of them. Obviously, there are some of them that are exempt from VAT, and some of them that are zero rated, like your sanitary pads that are added to that list. So there's a list of what is exempt and what is zero rated, and if it's not in zero rated and not an exempt, then the defect is that it falls within the category that VAT must be applied on it. So on that front, we saw that it is now allowed for you to register, even though you are not making any taxable supplies yet, but you plan on making taxable supplies in the future. Say, for example, you're just starting off as a recording, but you feel you're not going to make money in the next 3-4 months, 12 months, but 12 months is too far. Say 3-4 months, but you're scared. Should I register now or should I not register? Because you see, a whole lot of companies lose out on the VAT because if you don't register on time and you buy equipment, that VAT that you're supposed to claim, because you're not registered, you lose it. So now the Act allows you to register beforehand, and then you can claim that, even though you haven't started making taxable supplies yet. So I think that was one of the very good amendments as well. We also saw some of the definitions that were inserted in the Act. Not really a definition per se, but there was a few insertions within the definitions. For example, we saw so when you're claiming VAT so VAT works like this. So when you sell something, you put VAT on top of that, and then it becomes your sales. And when you buy something, you also buy from somebody that has also put VAT.
Yes.
So the VAT that you put on your sales and the VAT that you're bought with, we're supposed to net it off. Say, this is how much I've paid, and this is how much I've charged on the goods, and then the difference, and I pay it over to Namra, or Namra pays you back if it's a refund.
So we're supposed to get some money from Namra.
Yes. So that's if the VAT that you're supposed to claim is more than what you're supposed to pay. That's when you're in the refundable position.
Okay.
Yeah. But if the VAT that you're supposed to pay is obviously more than what you're supposed to claim, then you have to pay Namra. So it works like that.
Both ways.
Yeah. So I think there was also a certain amendment in relation to that section that was amended to say, if you register and you haven't started making taxable supplies yet, then you must deduct. So that again was brought in the rules of the deduction, that if you haven't started trading it, then again you can make that deduction even though you haven't made any sales yet. And I think another
Wait. Is that to accommodate SMEs, perhaps?
Yeah, I think largely to an extent, because most of them, they are the ones that mainly lose out on that.
Yeah.
Because they don't know. I know I've got a friend that started a business last year.
Yeah.
And we only registered his VAT, I think 2 or 3 months when he was already started. But started not like he sold anything, but started as, laying foundations, paying rent, finding a place, all of those things. And he was charged VAT on those things, buying equipment. But now he's unable to claim that all that money that he had spent because he was not registered.
He was not registered.
Yeah. So those are some of the things. Then I think another key amendment that was made to the VAT Act is if you pay NAMRA, but say you have on your VAT account you had penalties and interest and a tax balance. So previously in the Act had indicated that that amount that you've paid, if it's not sufficient to cover all the three, it will first be applied. It must first pay penalties, and then and then interest, and then only the tax. But in practice, it hasn't been happening that way. So now that section was changed to say, okay, which is reasonable, that if somebody pays first, let it first be allocated to the tax, and then to interest, and then to penalties. So that was also one of the amendments that was made to the Act. And then obviously, the celebrated, zero rating of sanitary pads.
Yeah.
But the funny thing about not the funny, I think funny is,
well, however I put it,
is the wrong word, but the interesting, let's say the interesting part of that is the ministry decided to define what sanitary pads are.
And leave out some products.
Yes, and leave out some of the items to say no. This for VAT purposes, these are not sanitary pads. So that
means they had to not rely on the general definition of sanitary pads.
So they
come
have
up
to make
with the one that that is accommodating their preferences.
Yes. So it normally happens when you have goods sometimes that obviously serve the same purpose, but some of them are considered sometimes luxury.
Yeah.
So for example, if the ministry decide, okay, we are going to zero rate cars, but we're only going to zero rate cars that are standard.
Yes.
So
if
we only
Mercedes-Benz,
no, then it's considered a luxury. And
they got some flashbacks.
I saw that when you must pay VAT on that. So I think for the ladies, some of if you are unsure obviously of what has been included in that definition, sanitary pads for VAT purposes, before you go start fighting with
the shops
to say no, we read that there's no VAT.
Yeah.
So, but some of what is considered the sanitary pads obviously is menstrual pads, the normal ones, and then maternity pads that are used for women in labor, both before and after labor, and then panty liners. So the ladies would know what those are.
Well,
but for other items such as your tampons, your menstrual cups, and feminine wipes, and all of those that are considered that are not that commonly used. Let me not say commonly
used,
but
they are. It also has an effect of, do we have proof that they are not commonly used?
That's the thing also. So those are considered luxuries, and therefore you must still pay VAT.
Luxury, yes. So they left them out.
So I think those are some of the key amendments that they made to the VAT.
Let's look at the stamp duties. What happened here, and what are these stamp duties?
So stamp duties, this is, the easiest way to explain them. If you have a flat, for example, or a house, when you rent it out, those stamps that you put on the document, if you go to the bank and you want to take a mortgage, those stamps that they put on top, so those are what you call stamp.
We're supposed to pay for those?
Yes, we are paid for.
What exactly am I paying? The ink? Is it light administration ink, or
just that
the power it has?
So they legally legitimize a contract.
The contract.
Yeah. So just to say, if it doesn't have that, then it's not considered legal. Yeah. Or not enforceable yet until a stamp is on that document. So for that, they just inserted two definitions, and that definition is mainly linked to what we call securitization. So securitization is when you pull an asset. Say we've got computers like this, and then we pull them into one pool, and then use that pool to even lend out, to borrow money. So we're using that pool of assets.
As a collateral or what?
Yeah, as collateral, for example.
Oh, okay.
So in this case, the Act was amended to insert that definition of what it means by securitization and what it means, what an asset is considered for securitization purposes, just for that application, for that same duty to be applied on that. And it's really a minor amount for securitization purposes. It's just said, if you're going to pull your assets, say if this way, two assets are required for us to pull them into one, and we need to pay stamp duties on that, so we should, for us to pull the assets together into one securitization, into one pool, then there should be a contract for that. But previously, it was just that you can just enter into a contract and then you won't have stamp duties on that. So they just say, okay, but now if you're going to pull the assets together, you must have a contract and then you must pay $100 or $100 stamp on that.
Oh.
So yeah.
A lot has been said when it comes to VAT, income tax. And its contribution to fiscus. How big is the contribution of VAT and income tax to the fiscus?
So I think
just in general,
it's in the billions. It's in the billions. I mean, if you look at VAT, even the drinks that you're doing, there's VAT that was on them already. So VAT contributes in the region of 13 billion per year.
How much?
13 billion.
13 billion.
13 billion per year. Yeah. So it's probably going to reach 14, 15 billion in the next 2 years.
Okay.
And sanitary pads, I don't think the removal of VAT is really going to
impact that much.
Yeah. So an income tax at individual level, so that is the tax that is paid by working class.
Yeah.
So that's around 14 billion.
14 billion.
14 billion per year.
Just for us that are working.
Yeah. And then for
companies. Is that why people now make noise when government spends
money
wrongly?
We must make noise. It's a lot of money.
It's a lot of money.
Yeah, it's a lot of money.
Oh, okay.
So that's 14 billion, and then for companies, 7 billion. So it's 14 billion for, 13 billion for VAT, 14 billion for individuals, and then for companies, 13 billion. But I think before we, just to quickly go back to income tax, there was this, so it was also amended, by the way. And one of the key, and I think it's a very good amendment, was the 150,000 pension contributions that you can now deduct from your taxable income before you apply how much you need to pay tax on. So previously, so let's take it this way. So when you earn your salary, you've got your salary and then plus your allowances and all of those things, housing and all of those things. But before you now deduct the tax, there are some of the things that are allowed to be deducted from that amount. And one of them is obviously pension contributions. If you have a child, your educational policy for your child, you can also deduct that. Your retirement pool, your retirement fund, if you have a retirement fund, for example, with Old Mutual, that is not necessarily your pension, you can also deduct that. And also keyman policies. Keyman policies are mainly policies where, say, you are very important to the company. So the company takes out a policy against you. That if anything happens to you, while we find your replacement, there should be money coming to someone to compensate for that cost.
So there are people that are covered like that?
Yes.
In Namibia?
Yes.
Why am I not covered? I think my employer doesn't check me.
It's a good conversation to have with the employer.
I need to be covered, Okay.
So that is one. So previously, before the amendment, that particular amount was you could only deduct 40,000 a year, which was like 3.3 for all the items. Not 3.3 for pension, 3.3 for retirement, 3.3.
All of them
together collectively, you could only do 3.3. But now with the new amendments, they upped that 3.3 to I just want to make it division here. So it's 150,000 per year now. So that divided by 12 will give you 12,500. So it's a very big jump. Are
there reasons why they made such amendments? Are they looking at something, or is it? How does it speak to us?
So I think the last time it was updated was 2011.
So
we've got 10 years, 10 years. That amount was not updated, and obviously people are saving more. I mean, if you're saving more on, if you're saving 3.3 only on your pension and your retirement and your kids' educational policy, I mean, 3.3 is not sufficient per month, and 40,000 is not sufficient per month. So that's why it was increased. I think previously when then Finance Minister was Kalesh Ledwine, he had indicated that it was important that this was increased, so to allow a continuous saving culture for Namibians, and that's really what happened. That they increased that
we are going to expect GIPF to come to us and say we want some.
I don't really think so. But this is a good amendment, especially for those that were contributing. If your contributions were more than 3.3, obviously this year you're going to get the refund.
Serious?
Yes. If it does, that is now your personal.
I need to check.
Yeah,
I need to check my book.
You need to go check and see if you're in a refundable position.
Oh, okay.
So that's I think that's one of the key amendments that was made to the Income Tax Act.
Yeah.
And I think another key amendment that was made to the Income Tax is to say, and this really speaks to, I think now we have a very, it's still not that grown yet, but our oil industry, I think it's getting there. And there's an amendment that calls for the inclusion, if you sell a mining license, I mean an oil prospecting license. So now if you sell it abroad, regardless of where you sell it, who you sell it to, if you sell it abroad, or whether you sell shares in a company that owns that license, then it's considered that you've sold that license in Namibia, and you need to pay tax on that license. So it used to happen that people would acquire a license here in Namibia, and then they go sell it outside.
And nothing paid to the
state. And these guys, you acquire a license for less than 100K, and when you sell it for 20, 30, 40 million, just the license itself. For the other companies to come and prospect to check if there's oil and all of those things. So that was really to target those guys that sell licenses offshore without the state getting anything
out of it.
Yeah. And I think
No, I wanted to move on towards the end, unless you want to add something.
Yeah, I wanted to add something quickly on the amendments that were made to the Income Tax Act. There was also that amendment that I spoke to about the application of, if you pay an amount.
Yes.
First paid to penalties, interest. So it was also again revised for income tax. So now the amount is also going to tax first, and then interest, and then penalties. And then I think one of the very difficult amendment that was made, which is not really common because it's mainly targeted to foreign companies.
Oh, okay.
So what foreign companies used to do, or some of them still do, is you have a company, you say, I'm coming to Namibia, an investor, coming to Namibia to start a new company. I'm bringing capital, 150 million. But how they do it is they use 150 million, but they give that company, so you have Musheko Incorporated in America.
Yeah.
And then you say, I'm going to form Musheko Incorporated in Namibia. But when you're starting, you're not coming with capital, real capital to Musheko in Namibia. You come in it as a loan. So you give Musheko company in Namibia as a loan. Because you don't want to pay tax, what you do is this loan. Obviously, this Musheko company in Namibia must now start paying interest on the loan.
Yes, on the
to the American company.
Yes.
So what the companies do is they take this loan and charge a very high interest. So when they charge a very high interest, the money they make here in Namibia,
it goes $100.
It goes back
through interest.
Through interest. Yes. And what they end up paying is like peanuts. Sometimes they don't even pay anything because they say
the interest is high on the loan that we are paying.
Yes. And you can't say anything because it's a loan. You can't do anything.
This guy's smart.
So that it used to be a practice note per se, but it was never legislated. It used to be advised by the Bank of Namibia, but now we saw it was being legislated. It's now being legislated to say, if you own at least 25% in a company, and you are giving this company a loan, if the loan that you've given to that company is is equivalent to a third of the actual capital, equity capital that you have invested in that company. Then you are not going to deduct any interest.
Okay.
We are going to see it as you are just trying to shift your money from here, you want to be taxed to America in this case, yeah. So now that's the case. So it's now legislated that if you do that, then it's not going to be allowed. But then it's not game over.
It's not done.
It's not really game over, but there's another section that was added to say, if you've got a case, if you really have got a case to say, I'm deducting this much because you know the risk that I've incurred is this. You can put your books, present your books, and then the ministry can give you look at it and then evaluate and then see if it's fit. Yeah,
to get an
exemption. They can exemption, or they can say, okay, you can only deduct up to this level.
Up to this level. Yeah, not so much.
Not so much. So that in essence is really.
We're running out of time. We have one more question to go, which is about submission regarding treasury and all these type of things. So it's can the public make any submission to the treasury when they feel a particular law is no longer serving any purpose?
Yeah, no, they can.
The procedures, any ordinary person, or do I need to write a certain way, like I'm doing a cabinet submission?
Yeah, so obviously there should be. This is a law. Yeah, there should be some formality. So formality is if a particular section, for example, within an economy feels, no, this tax we are done with this tax. It's no longer serving its purpose. It's irrelevant. You can always approach the Ministry of Finance and make that submission to say, please, guys, consider looking into this. But I think to get that force, really, you need to come as an industry. Say small SMEs, say manufacturing companies, you come together and say you make that submission. So it makes sense at that level.
Not necessarily one person.
An individual. No, I think
because it should have some weight.
Yes, because if you do that for Musheko and then you feel aggrieved by a certain section, and then I also feel aggrieved by a section, and that, it becomes quite difficult. But if there's that common union to say yes,
farmers,
something like that, then they can make submission to the ministry or straight to Parliament and say, guys, I think this law needs to change. It needs to go away. So it's not always that the taxpayers must wait every time for the Ministry of Finance to say no. They can also make that submission. There's a very good paper that IPPR did on how laws are made. There's a particular a step-by-step method on how to do that. So an advice would be for if you really are aggrieved, as a community, as community of taxpayers to change a particular section or a particular law, you can follow that procedure and then make a submission accordingly, which obviously it has happened
in the past.
I mean, we saw, especially around that 150, it was a conversation that was largely driven by pension funds, because they saw their members were not saving as much as they could. Because I mean, okay, you save this much, then your tax, when your pension is paying out, your tax is like, it's a lot.
Yeah, I hear people, there's also tax on the pension. I don't know why I was saving for me, now all of a sudden my money, it's again taxable, but conversation for another day.
Yeah, no, we can have that conversation again. But that, you can always make that submission, and then the ministry or Parliament can have a look at it. You make your presentation as well. You give your facts, and then I think if there's a case, I don't see why they will not allow it. So yeah.
Thanks. Hopefully we have learned one or two things. We will try to come back here more often. These light conversations. Stay tuned. And let's see you another day.
Cool.